Okay, hey everyone. Hope you're all doing well. Hope you're good. We're just before 8 o'clock on Tuesday, the 9th of May. Let us know if you can hear me, and if you can, we will get started. Hopefully, I'm not too quiet like I was at the start of the last one. I think I got the mic in the right position, the volume at the right place. So, just down to you to let me know where we sit with that, and then we will kick off. Been an interesting. Perfect. Thanks, Mo. Yeah, been an interesting couple of days, really. I mean, we're going to go through the charts in a moment, but we have seen that Bitcoin has been falling, I wouldn't say rapidly, but steadily over the last week or so. And, has the Bitcoin bubble burst? I don't mean as in no one's interested in Bitcoin. I just mean we've obviously been in a sustained uptick for the last 100+ days since the start of the year. And, are we now starting to feel that's it? Or is this just a slight pullback before a further climb? We're going to have a look at that today. But Chris says I'm quite quiet. Okay, let's see. That's volume to max. So the only way I can pump it up is to just shout a bit louder. Hopefully it's not too deafening. Obviously, Chris, I would say just check your volume as well, just to make sure. Good afternoon, Mr. Tacos. You're giving the game away. You're not based in the UK because it's early evening for ourselves. Okay, so what are we going to talk about today? So usual stuff. We'll go through the news. Have a look at the BTC congestion that we've done. We'll have a look at exchanges that have gone over. We'll talk about Sam Bankman-Fried, because it's been a while since we've spoken about him. Then we'll have a look at the Bitcoin bubble as I've caused it, and what's actually happening at the moment with the price. Is that something to be concerned about, or are there external factors affecting this, and what could the implications of those be? Got a couple of questions which we will run through, including the Pi cycle, which I was supposed to cover last week. I'm going to briefly talk about it today. Just because we do have a lot on, but I did say I would. And we've got 2 exchange tokens. God knows why I agreed to do 2. But Bijan asked to have a look at OKB and BitDAO, and I thought there'd be 2 easy tokens. They're not quite as simple as I thought they were. So, yeah, but anyway, we'll have 2 today, and you can tell me how good and in-depth you thought those were. Perhaps I will just stick to 1 going forward. Obviously, we will then get into price. We'll have already talked about the Bitcoin price action, but we're going to have a look at some of the altcoins, have a look at total market cap, have a look at some of the ones you guys are certainly interested in, the likes of Casper, and some of my big pot allocations. If I have enough time, I'll give you a little update of where I am with my meme allocation. Certainly, that's been an interesting couple of days. So, yeah, plenty to go through. I hope you enjoyed all, but as always, any questions you've got, then we can go from there. I have tried, without boring everyone, and I will cut this out of the video, Mr. Taco, I've got my volume set to max through OBS, got it through max on my Go XLR, so it's either the gate, it's pretty restrictive, and that's what stopped it, or it just wasn't close enough to me. I'm not going to mess around with the gate right now. All I can do very quickly, let's just try. Okay, how's that one? I've gone to the standard, never bothered changing its settings. I'm just going to crack on, and until someone tells me they actually physically can't hear anything at all, I will assume we're okay with that. Right, we are going to dive straight in. Let's move that out of the way though, because we don't need that there anymore. And I'll just get the charts up. So here we are with the standard 4. So yeah, Ryan's put, well, that's much better. There we go. Right, so here we are with the standard 4. We've seen that fall over the last 4 or 5 days from BTC. Potentially a little double top that's been forming on there, maybe signaling there's a path heading down. Really, for me, the thing that I'm noticing is we've topped out there. We failed to clear this bit of noise here. So that downwards momentum that we talked about in the last call, when we're talking about drop 1, drop 2s, etc., seems to still be in play. But just bearing in mind, this is the daily chart. So this could just be a pullback before a further rise, which we'll go into a bit more detail. But certainly at the moment, there does seem to be some movement to the downside. The only caveat I'd say, and again, I'm going to go into a bit more detail, is this line here. We've not broken that 27,000. That 27,000 has been hit a few times over the last couple of months, and it has held each time. So really, for me, I'm not going to get super, bearish. 25 is definitely on the cards until we've breached that. Now, some of you may say that we're already halfway down to 25 from there, and I would agree, but I'm not necessarily trading this. I'm just trying to think about it from my mindset's point of view. So yeah, so that's where we are. The Dixie again, well, for about the past 2 weeks now, maybe a little bit longer, 3 weeks, has just been hovering in and around that 101 level. Sometimes got a little bit over 102, but generally it has just stuck around about 101, which in contrast to the S&P 500, this has been up and down, up and down. Okay, the scale's a little bit different, but we've seen it go all the way down to just over or just under 4,050, and then all the way up to about 4,200. And it's been whipsawing pretty aggressively during that period. So they're kind of invertly correlated, because on the red days for the US dollar, that's been a green day. For the S&P 500, that's pretty much how it's always gone. We have had some interesting news events that have come out. Obviously, FOMC last week, and tomorrow we've got the CPI data, which we will just briefly touch upon, just as a little warning. I know you guys potentially may have some trades that are open at the moment, some shorts, and I'm not telling you to close any of those, but CPI days and FOMC days are generally very volatile. Now, the data kind of suggests that it's going to be a bit of a flat day. We may actually just come out as flat, no increase or decrease within the inflation figures. So it may be a bit of a non-event, but that won't stop the market makers from moving the price up and down before where it settles. So if you are going in tomorrow with some open trades, just have a look at where your stop losses are. If you think they're in a safe position, it is a volatile day. They may actually move through that. So bear that one in mind. Right, we've had a couple of questions. So first one from Reese: can you look at the .BTC and discuss how useful the chart is as an indicator for future price action? And then he's also asked, can you demonstrate how to overlay charts on TradingView, CAS and BTC, for example? I'm going to do both of those now, just to get them out of the way. The price cycle one I will cover a little bit later on. Okay, so what we got in front of me? Oh, by the way, I've got a new color scheme for the charts. Just love your feedback on whether or not this one works better than the white charts or not. I can change the color of the bars, etc., and the wicks. Just settled on this one for the moment, but it is a work in progress. So here we go with the .BTC chart, and that is not looking particularly healthy. So how can we use this chart at the moment to try and give us an indication of where future price is going to go? Well, that's kind of difficult at the moment, because DOT against BTC is in a pretty sustained downtrend and has been ever since the end of the bull run in November 2021, which is not unexpected, given that's a blow off top. Everything's going to fall in price. Chances are altcoins are going to melt faster than BTC, and that is the case. And where we are right now is we are actually just about below historic weekly closes for DOT's history. So we're about to set, if this closes like it is now, into uncharted territory. So that does make it a little bit difficult to utilize. But I'm going to just pull out one of my old favorites, which is obviously the Fibonacci tool. And we can have a look at potentially some levels they are. Now, you're going to have to take that with a bit of a pinch of salt, just because we haven't reached a bottom at the moment. And when I'm going to draw a couple of these fibs, I'm going to assume a bottom, because that's the only thing I can really do. But you'll actually see that it does give us some interesting levels for us to have a look at. So I'll just try and neaten this up a little bit. Get the old fib tool out, and we'll go from the blow off top high, which I know it wasn't the high for this price. We'll do that one in a second. This is the Bitcoin market top in November 21, and we'll take it down to where it is at the moment. Okay, and I think that's just the best we can do. We just have to make an assumption that that's currently the bottom, and we can have a look at some levels in and around there. So if we're drawing this, we can actually see that this fibs works fairly well on the way down. We've come all the way down. I mean, we initially tested the 382, broke through that to the 0.5, came back up, retested it, melted all the way through and down to the 786 before coming back up to the 0.5, retesting it there, working its way back down, and then falling through to where we currently sit. So if we were to just utilize some of these levels as maybe potential targets we could look at on the way back up, then I think the few that really sort of shout out to me are going to be, if I can find my rectangle. I mean, this I wouldn't sell at this level here, but we know that it's previously interacted in and around there, and the weekly charts have kind of closed on. I'm going to take this one off because that's not one I would necessarily be looking at. For me, I'll be honest, I would actually wait even for it to go past the 618. Although the 618 is almost double where the price is at the moment, if we get to the 0.5, we can actually see that that would double the Bitcoin in terms of where we're going. So that would be a level that I would certainly be looking at, sort of 0.00039, let's just round it up to 4. for cash, and then we'd wait for it to go through there. Now, I just can't give you a time frame for when that's going to be because we just don't necessarily know how long that's going to take. I can give you an indicative one in that we know that the halvening is about a year away, so we should see Bitcoin continue to increase in dominance leading up to that period, and then we're going to slowly start to see altcoins take over. So we should start to see that bottoming pattern, and then we'll start to see it actually start going parabolic like we did at the beginning of 2021. So you can kind of see here, unfortunately, this came out in September. So you kind of ignore that first 2-week spike. But DOT struggled because Bitcoin was flying up as we worked through the sort of summer to winter months of 2020. And then we got into 2021, January, February. Bitcoin was still rallying, but other altcoins were rallying harder. And that's why this looks how it does. And so, yeah, so we're kind of saying maybe we are 12 to 18 months away before we see that huge green spike, but maybe around about 12 to 15 months before we see the sort of sustained uptick, the reversal of the trend, starting to set higher lows and higher highs. Now, it doesn't mean that we're just going to continue to melt down, but it doesn't guarantee that we're not either. We could either just start to meander and range for a bit, or unfortunately, we could continue to see this fall. So let's try and have a look at a few other levels that may help us in where we want to go. So let's get rid of this one. Otherwise, it's going to be pretty messy. We'll leave that there because I don't think it's going to get in the way. So let's say, well, okay, what happened if we'd gone from the actual height of this one? We'll take it down to this level here, but we'll extend it out. We kind of see this kind of works as well, actually, in terms of where we're going. So we came down to the summer bottom, came all the way back up, retesting these ones. Didn't quite hit back to there, but almost did onto the blow off top. And then without me going through each single one, you can kind of see how this steps through, bounce between each level. And why have I mentioned that? Well, actually, we have this 0.2 level down here. And if it's paid so well on all the other levels, is this a potential target for where DOT could get down to versus BTC? Might not change the dollar value of the price. And so 1636 certainly could be a target. Now I could create any numbers here. I think I even do have 3s and 4s. Are they not signaled on there? But you can keep on adding them. But the fact that this has actually worked so well in that previous levels, potentially this is a level that you could look towards as well as an entry position. So again, we can mark this one up on the chart somewhere in and around there. Let's get rid of this bit, and that gives us that level there. If we get rid of this fib level now, no idea what am I trying to draw here. I don't know. Let's see. I don't know what this is really going to prove. Probably nothing. Nah, it's not really giving us much. Maybe see if I put it down to this one. I mean, I don't really count these first 2-week candles because it just launched. I mean, this gives us some confluence with some of the other levels that we identified. It was 3.3 earlier, it's 3.269, and the 3.7, it was 8.9, and now it's 7.8. So again, fairly close with those two. So yeah, potentially. I wouldn't give that. I think the previous two, probably the best thing you can do from that. But I just can't tell you time frame. Completely honest, I can't. And hey, maybe the fib doesn't work. Maybe you don't like the fibs. That's all I can really utilize within here. People are going to say, look, there's some form of compression forming here. I'm not really buying that at the moment with where Bitcoin dominance is because we're almost at the apex. I don't see an alt season on the cards ahead of a Bitcoin season. So, yeah. Did you sell any of your portfolio? Oh, Manny, I'll go over that a little bit later on. I have got rid of a little bit, but not a huge amount. Right, so the other question was how do you overlay further charts? What I would say is, for any of you that have a bit of a spare time, there is a video on Vimeo of me going through TradingView. It's actually about 55, 60 minutes long because I just go round the clock and I go through every single button, how you manage everything all around here, how you create your own favorites, how you do all this kind of stuff, and also cover this. So if you have a bit of spare time and you're still a bit scratching your head about how to use TradingView, you want a few more advanced features, then certainly give that a view. You can have a look at it in, I think it's in Avengers videos in Vimeo. But anyway, to answer your question more directly, so it doesn't matter what the chart is, but you asked for CAS and BTC, so that's what I'm going to do. So the original asset you want, you just set up as you normally would. You find it in your portfolio, you click on this plus button, you type in what you want, and then you find it. I've selected CAS. If you now want to overlay another chart on top of that, you go up to this top left-hand corner where you can see CAS, but there's a plus icon next to it, and if you hold over it, it says compare or add symbol. So we click on that. You type whatever you want, but I happen to have BTC here. Now, don't just immediately click on this, because if you do, you can see these 3 boxes here. If you immediately click on it, it's going to give you same percentage scale. Now that's not great because CAS is 2 cents and Bitcoin is $27,000. So when you put same percentage, Bitcoin's going to look like a straight line. So if we hit that, you can now see down here, that's telling you nothing with what Bitcoin's doing because it's trying to use the same percentage as what CAS is doing. So I don't particularly find that one useful, but if that's what you're looking for, then select the first pane. I'm just going to readjust this to where that is. Go back to top left-hand corner, plus icon. There it is. Now you can do new pane. So I've not got a new price scale, new pane. So I've click on that, and that gives it with its own price scale in its own pane down there. Now, it will always default to a line, which you may not want because you're not used to looking at lines, but you can change that. That's just its default. All you do is hover over this, hit the settings. You're already on style, go to style, and then you choose candles. You can change whatever the colors you want, and there they are waiting for you. And now you got it how Bitcoin looks. Again, this is not the preferred one I go for when I do it, but that is an option if you want it in a separate pane, but on the same chart. So what I do is, again, bit of repetition, up to the top left, hit the plus, find what I want, but I go for the middle one, which is new price scale. So that's going to overlay the chart right on top of mine, but in this right-hand corner, it's going to give me 2 price scales, one for CAS and one for Bitcoin, and I can individually tweak those. So it kind of looks like they're representing each other. So let's do that. And as you can see, there they are. So I'm just going to move this one down ever so slightly so that we can see the difference between the two. But because I'm holding on here, I can scroll over the green one, move that one up and down as I choose, or I can go on the orange, move that one up and down as I choose. But if I do this, it moves them both in terms of the width of the candles and the lines. But you kind of get a good understanding of what happened between the two assets here, because I need to just tweak that. There we go. Actually, we can kind of see that Casper has followed BTC fairly to the T. Now, there's a couple of instances where it hasn't, but if you just bear with me for a second. So in November, we had the FTX crash, Bitcoin price fell, but actually Casper's did not. It rode up. But when Bitcoin stabilized for that 2-month period, Casper completely fell all the way back down. And by the time Bitcoin's price got back to the level it was at FTX's, Casper's price had fallen all the way down to where it was prior to FTX's collapse. So although they went their separate ways for a couple of months, they effectively met back to the same position at pretty much the same time. And then as Bitcoin went up, Casper's gone up, and we've kind of had that journey. Yeah, there's a week's disconnect again there, but nothing too serious. And we saw that journey. So it kind of has actually mirrored the growth. Now, if you looked at it from a percentage point of view, Casper's percentage compared to Bitcoin's is astronomical. Casper's is around about 900% year to date, where Bitcoin's is, well, at one stage it was about 80%. I think it's probably down to about 65% now. So yeah, they've definitely sort of seen a difference in percentage or the percentage of their growth of the year. I don't know why I'm stumbling on my words there. But anyway, hopefully that answers your question there and how to do it. If you forget, you don't watch it back, just ask me a message, send me a message. I'll help you out with that final one. And I'll cover the Pi cycle afterwards. Right, let's jump into a bit of the news. I'm going to pretty much rally through these quite quickly. But you might have missed it. It was a bank holiday in the UK. Probably people weren't paying that much attention. But we had an interesting, this is a bit of Binance FUD, but an interesting situation we had with BTC and with the Bitcoin network, in that we had a significant amount of congestion over the weekend with the Bitcoin network. And as you can see in the top line here, the Bitcoin mempool, not meme pool, was clogged with over 400,000 transactions waiting to be processed. Now the I'm going to call it meme, the mempool is basically like a waiting room. That's where transactions sort of sit whilst they are waiting to then be individually assessed, etc. And usually that cycles through relatively quickly, but for a couple of days over the weekend, this was getting to a significant backlog, which was causing, it's a stressful time whenever you withdraw Bitcoin, I find, because if you do it over a different network, it happens in minutes maximum or generally seconds. And so you're never too worried. But if you send Bitcoin, even over the Lightning network, it can still sometimes take 30 minutes and sometimes longer than that. So, what they were finding with people who were trying to withdraw from Binance is that there was an over 400, wow, over 4 hour waiting list. What is wrong with me today? Waiting time for these transactions to take place. And so what Binance did, instead of just compounding these with more and more transactions being added, they just stopped withdrawals, ceased it for I think about 12 hours initially, reopened it, but unfortunately then we moved into the 8th of May, and they had to do it again because they had even more withdrawals. Now people were able to get their Bitcoin, don't know whether or not it was FUD or nervousness or whatever, but suddenly there was an even bigger rush for people to withdraw their BTC, and I think it was 485,000. I'm sure it says somewhere in it. Yeah, here we go. That swelled to nearly 485 at the time of the second withdrawal halt. So I think that's now fully cleared up now. I'm pretty certain you can do BTC withdrawals on Binance. I've not seen a third suspension of withdrawals, but hey, someone might be able to correct me there. And this has actually led to quite a few questions, because although we've not really talked about it, there's this thing called the Bitcoin ordinals, which is effectively, in inverted commas, without spending too much time, the NFT for BTC. And these were introduced a few months ago, and they have actually been clogging up the Bitcoin network. And there have been developers now that have sort of been calling for this to, these to be removed, because it was never really what Bitcoin was intended for, and it's relatively slow as it goes. And now we're going to add people sending JPEGs or whatever across the network as well, and there's potentially a problem there. But what I will say is these BRC20 tokens, I think they've accumulated over $1 billion worth of value in the matter of months. So there's definitely people who are interested in utilizing them. It'll be interesting to see where that goes and what necessarily happens with that. If there's going to be maybe a fork that will deal with it, I don't necessarily know. But yeah, it looks like the introduction of this has certainly hampered the ability for them to transact. But the other interesting thing with this was the miners fee has gone up significantly over the past few days, and actually it has increased to levels not seen, well, actually higher than the November peak in 2021. So I can't remember what the exact dollar value is of each of the transactions, but we're seeing that the volume of traffic is so high, people are trying to necessarily push them through. They're having to pay more in terms of fees for that to happen. So the net winner from all of this is definitely the miners. Because although they've seen the price of Bitcoin fall, they're getting actually some dollar value from each of the transaction fees. So definitely an interesting one there. So there's also a possibility they had to get withdrawn, so the transfer funds. Well, sorry, yeah, Binance, that's right, Mr. Tackers. Binance said that the vast majority of the tokens they were moving was just moving from their hot wallet to their cold wallet. So nothing necessarily to worry about. It actually goes on to say all of this, excuse me, in this article, which I didn't really read through verbatim, but I'm going to post it in chat so you can read at your own leisure. Next one. You've probably all seen this because I know Simon telegrammed it out, but a bit of a shame here. One of the OGs, one of the first exchanges that I set up, has had to close some of its offices or its businesses, and I just want to be clear about that. So Bittrex Incorporated, and then a couple that are based out of Malta, have gone into seeks bankruptcy, gone into administration. I don't know what the technical term of those are going to be, but actually Bittrex Global, which is what we would tend to use, is actually still fully up and running and still does run. So just to clear that one up. Now, Bittrex was the subject of a SEC investigation, and the SEC laid charges against them at the back end of last month. So maybe this is just I can't remember which was the coin, but I think there was it was fairly nailed on that they were going to be done for this. So maybe they've just added to that. I don't think it means that they'll get out of that responsibility, because it was done before they filed for bankruptcy. So I'm sure they'll be sitting on the books as well, waiting for the courts to open them up so they can get their money out of it. But it's just another company that's leaving the United States. And I didn't have time to go through all of them, but we've now seen Brian Armstrong of Coinbase. He's been meeting at the UAE. He's been talking about the fact that they may look to move over there. We've got Mike Novogratz and his company, which is it Galaxy Digital or Digital Galaxy? But they're now entertaining the fact that they're going to move overseas just because of all of the regulations that's coming in the United States. Or maybe not the regulations, but the crackdown on crypto companies. So, yep, this just seems to be another one of those cases, sadly. $25 per transaction. Thank you. That was going back to the Bitcoin. And then the final news is Sam Bankman-Fried. He is looking to try and dismiss 9 of the 13 charges that he has maybe it's 10 actually, because it says all but three, that he has filed against him, which is obviously a bit of a cheek. Now, this doesn't go into each of them, and most of us, we don't actually remember. I tried to find just a list of what the 13 were, but unfortunately, no one seems to have taken the time to read it down. I couldn't be bothered going through the paper again. But the ones that he is not contesting, it's a conspiracy to commit commodities fraud, conspiracy to commit securities fraud, and the conspiracy to commit money laundering. Now, most of the ones where, excuse me, he had just actual fraud against him is the ones that he's fighting, because there's the difference between conspiracy and the fraud ones. And then there was he tried to, well, alleged, the last one that was added in March was alleged $40 million bribe of some Chinese official. There's also charges about political donations, wire transfers, and all sorts of things. He's trying to dismiss all of those, saying that the motion doesn't meet the requirements to actually settle all of those. I think it says violates the treaty's rules, speciality provisions. There we go, down at the bottom. So it'll be interesting to see whether or not those get, or this gets thrown out and he has to stick with all 13, or whether he wins some of them and it gets whittled down. He's still looking at an awful long time in prison. I think at last count is about 147 years. So I think he's still going to get a few decades behind bars. But hey, we'll continue to update on this one. The court case is set for October. I don't think there's an actual date in October, but it just says here it's scheduled criminal trial in October. So it's a few months off, but you'll be surprised how quickly that one will come about. Speaking of how quickly time goes and dodgy characters from the past, happy lunar crash anniversary. So 9th of May last year was a day that, for those of you that were in the group, we were glued to the charts. And I kind of started on the end of the 8th, which was like the Sunday night. Markets opened on the Monday, and Luna and UST just shat the bed. Want a better term, a lot of us were diving onto Bybit to try and short it, whilst others were trying to get their money off Anchor Protocol and all of these others. And it was just a very uncomfortable time if you were in the market, because everything was falling. And that was 12 months ago. It feels like almost yesterday. But yeah, it was amazing, you know, because at the same time we had Do Kwon putting out all these tweets, and it just cracked me up, you know. Here, knowing what we know now, obviously he's trying to, you know, damage limitations, but I'm up, I'm using morning, and you can listen to crypto Twitter influencers about USDT depegging for the 69th time. Oh, what he didn't know only a week later. Loves the chaos. I mean, this was the hubris of the man. Trying to go for it. And then what do we have? So USDT depegged in the room with us right now. No, I prescribed 24 hours of pegging over the next 7 days. Of course, we never saw that. UST went all the way down to, what was it, 98% drops down to 2 cents. But some of the stuff he was putting, there's one here, I can't remember where it is. I've seen it loads of times on Twitter today, but it's somewhere around there, where he's like, steady lads, here we go, deploying more capital, steady lads. But this was it, you know, he was, to be fair, he was very open, a bit like SBF was at the FTX crash, you know. He was obviously trying to right all of his wrongs, or at least cover his tracks, but he was putting it all out on Twitter in real time. It was just fascinating to watch, and every tweet he did just moved the markets, you know, because there would be the people that hadn't realized how bad a problem it was, who were Luna Maximus, were, you know, yes, he's getting behind us, price go up a little bit, we'd all get stopped out of our shorts, we'd have to then re-enter on the fact that it depegged again. And it was a really interesting time, but it was 12 months ago. But you think that this was the start of, well, I was going to say the downfall of Bitcoin, but Bitcoin had already fallen from 69k down to about 44,000 at the time. But this was the first of the 3 Black Swan events that occurred last year, and every one that followed it cited this as the reason it started in the first place. Whether or not that's true doesn't necessarily matter. But for those of you that can't remember what it looked like, here was the Luna chart. This is Luna, not UST. Does anyone know what the ticker is for the traditional UST? I can't remember what it was. Here we go. I found it. So we've used the chart there. So we've got Luna in the candles, and then the line is UST, and you can kind of see. So it started. Here we go, on Sunday the 8th, as I said, Monday, this was the day that really hurt. Wednesday and Thursday was still particularly bad for Luna, but I think Bitcoin had, it bottomed and it was not doing well, but it had already hit its bottom. But we can kind of just see how the fall from grace here, and then neither of them have ever really recovered. Obviously, they've got the new tokens that are out that are still not doing as good either. But it got down to ridiculous levels. At one point, obviously, this got to zero, and you can see that what happened is this candle here is Thursday, the 12th of May. The next candle you can see is Thursday, the 31st of May. So Luna just went offline, and we never see what happened with either of those charts. It was an interesting time. It was a pretty unnerving time. There was a lot of messaging in the Discord and trying to stop FUD or fake information and trying to validate things. But at the same time, it was interesting to watch. And I think the vast majority of us were probably on the right side of that, in that we didn't have any UST tied up in Anchor Protocol. Apologies for those of you that did. And so I don't want to say that we enjoyed the ride down, but we weren't as worried as other people were on the way down. But, unfortunately, people lost millions due to that. And again, we shall see what happens in the upcoming months with Do Kwon now that he is being arrested. I've not seen any extradition charges stick yet, but maybe someone might be able to correct me in the chat. Right. Let's have a chat about BTC then, I think, and where we are with this. And again, I'm not going to try and labour the point necessarily too much, but I'm just going to take all these off for a second. Don't necessarily need them there for now. But as I said, in the first couple of minutes, we've had the last 4 days of sustained falling since we hit around about 30,000 just prior to the bank holiday weekend. And there's definitely been a sentiment shift within the market. Now, I don't think the news out of the FOMC last week was particularly bad in terms of we got the 5.25%. I don't think anyone realistically was expecting Powell to be standing there on an aircraft carrier with a mission accomplished banner behind him. Shout out to those that know that reference. The job was never going to be done. I think he was, relatively hawkish for what he was going to be, but no different than what he's been in the previous months. So I don't think that's going to have an effect for it. I think maybe what's had an effect is the US banking system. And we've seen what's happened with First Republic and some of these other mid-sized ones, and then some of the other news articles that have been coming out in the last couple of days. Half of America's banks are potentially insolvent. It's just talking about how over half of the banks, so there's 4,800 banks in America, over half of them are already burning through their capital buffers. And whilst how US accounting works, they don't necessarily have to declare all of those losses right now, but ultimately, just because they're not declaring the losses because they've got a loophole doesn't actually suddenly make them solvent. And so it feels like maybe actually the music is about to stop, and we might see a lot of these banks roll over. Someone else has actually done a study. This person, I'll tell you where they were because they're cited in this one. Professor Amit Suri from Stanford University. He's gone and done a study, and he identifies 722 who report unrealized losses of over 50%. So there is this feeling that this is starting to build up now. We kind of all knew it was happening because you can't have inflation at the rate it's at, but also have interest rates at the rate that they're having. And on top of that, just print money to bail out the likes of SVB and Signature Bank. Well, not they bailed them out, but you know what I mean. Bail out the other banks after those had happened. And now it's more a case of this wasn't isolated to 2 or 3 banks here. This feels like it's the entire system. Kind of getting the 2007 vibes, really, with where this is going. But it's not just over there. And an interesting article came out today from the UK about how 700,000 UK households missed rent or mortgage payments last month. Which is an incredible amount when you think about it. And then on top of that, I saw today that Skipton Building Society are now doing for first-time buyers, so it is a limited market and you've got to have good credit and a few other things, but 100% mortgage, no guarantor required, just to try and get some first-time buyers who perhaps don't have the savings or don't have a family to be able to back on the housing ladder. And whilst, there's people I've seen on Facebook cheering that, for me, that doesn't seem like a particularly good step right now, because we can see where the global financial market is. And if construction and housing is one of the first to go, and if that suddenly goes when you've got 100% mortgage, and then for the next, 5-10 years, your houses worth an incredibly lot less than what you paid for it, you're in negative equity, interest rates still pretty high, and you're still on a variable rate, they're still going up, you may end up starting to cause yourselves a really big problem there. So I'm not necessarily saying this is a particularly good step at the moment. Have to see what the APYs are for some of those and what the criteria is. And, maybe there's some lessons within that. But it already feels now like we're starting to get some of these crazy mortgage requirements. I remember back in 2006, I think you get 105% mortgage. They were giving you money to take houses out, which is utterly crazy. But then the next big step, really, well, not big step, but maybe another concern is Bitcoin's old nemesis, Warren Buffett. He has dumped 13.3 billion of his stock. And he doesn't normally go into cash unless there's a problem. Now, he's not taking all 13.3 billion of this into stock. Matter of fact, he's taken about 2 billion into cash holdings. He's put, there's a figure here, 4.4 billion into purchasing his own stock and 2.9 billion into shares of other publicly backed companies. But the fact that he's starting to move money out of the market kind of suggests that maybe we're no longer in that period of risk on. BTC, in my opinion, is still considered a risk on asset. And so actually, could this be a telltale sign? He is, despite what people think, he seems to have done very well over the last few decades in how he does it. So maybe he is starting to feel that this is not the right thing. Whatever indicators he has, it's not where he wants to be. And so perhaps we are now starting to see some concern there. And as Mr. Tacker's put out, he sold out his bank stocks last month or a month or two ago, which, again, seems to be a bit of a smart decision there. And so that takes us back to BTC and this bubble burst. Are we actually about to see this collapse? And if we do see it collapse, in inverted commas, how far could it possibly go? Well, before, for me, we start talking about it collapsing, there's, one huge level that I've already mentioned to you, but, we need to identify. And that's this 27K. We've not lost it yet. And until we lose that, we've hit this, 10 times in the last 2 months, and we've bounced from it every time. We've actually wicked down to it the last 2 days and bounced back. So until we lose and close below that, then I think we've got the opportunity to talk about the levels that we can possibly go to. And we're going to go down to lower high timeframes in a moment and have a talk of those. But, there's people I've seen maybe suggesting that's a left shoulder. I don't really like it, but maybe it is. We go on the lower time frames, we can tidy up. We've got a head there and another shoulder there. And inside that right shoulder is a double top. But again, we're on the neckline at the moment. So we haven't actually confirmed that those could be what's playing out. But if it does, and to try and give us an idea of where we necessarily need to go, let's have a look down that neckline. Oops, pull that back down. What do you know? Around about 24K. So 24, 25K in a very rough drawn illustration of that. So, that's kind of tying within there. For me, the biggest telltale sign at the moment is, as I mentioned, we came back down here. We've obviously tried to come back up, but we've failed at this level. We haven't taken out that high there. So it shows us, while there was initially interest at 27K, by the time we got to 30K, people had lost that interest, and we lost the volume and the momentum to take us higher. And that was proven because they did this double top. People then sold. It was quickly bought back up, but again, failed to even clear the height it had gone to only a few days beforehand. So it does actually feel like the momentum is drying up for Bitcoin, at least in the short term. And let me just make sure I've taken the paintbrush off. But again, is that necessarily a bad thing? And I will break it down into lower time frames, and we'll have a talk about what I talk about in terms of market makers and rises and falls in a moment. But, if you look at some of these uplifts that we've had, obviously big uplifts, nice pullbacks and recoveries. I mean, you could take that one there if you wanted, and then this one back here, but I've just done it as one. And so we've seen that other rise and increase. And then it's just a case of, how far we're going to see that come back. And actually, it could just naturally be that we're taking that breather. People are taking some profits. 30K is a psychological level. And now we're going to look to retest. And for those of you who have done the course, those of you who have been in the group long enough, that once you break a level, What you want to see in terms of healthy structure is a retest of that level, building upon it, and then off it goes. If it goes just away from it, and the further away it goes, the likelihood of it crashing hard back towards it is there. So it wouldn't necessarily surprise me. And last week we talked about 25k being a target in mind. We had that in mind because we were looking on the 4-hour charts, and we were talking about, so let me just get rid of that. Thank God the 4-hour. We were talking about potential M formations, drop ones, and then potentially into drop two. And without redrawing all of it again, I was suggesting there was a potential M formation here, and this was a drop one. And we were about, where were we? Here. And it was like, okay, that's it. And then I think probably about an hour after I finished the call, price just shot back up, and I thought, well, there goes what I know. But actually, in shooting back up, it didn't take out this high. So this ranging pullback is still valid in terms of the theory that I followed there. So all of this, and I'll just draw it like this and then change the color. Let's just change that to a blue. All of that is just price consolidating after the fall. I know what I've not done. Apologies, guys. I should have had those on. The reason we called this, I'll zoom in a bit so you can see it a little bit clearer, is it broke through the 50. So it broke through the 50, and then this one, when it came back, kissed the 50, I thought perfect, but actually it flew straight through it. But it's kind of consolidated. But now what we've seen is it break back through here with a vector candle. It's come and retested it, and then it's fallen through. And so is this the start of drop two? So we had drop one here. I'll change the color back to red so we can see it again. We've had this period of consolidation, which we've just talked about in there. That wasn't very good, was it? There we go. Drop two. Very messy. Is this drop two? But I'm going to put a question mark here because we still haven't cleared this yet. Yes, we've seen that fall back through the 50 with vector candles, so with volume, everything else as it comes back through. But we've been stopped in our tracks again at the 27,000 level. So until that breaks through, and it could, it's a 4-hour candle, this could take days, weeks we talked about for this to play out. But I still feel that there's likely that there. Now, when we go into an even lower time frame, there's arguments to suggest that actually we could look to go up to around about 28 and a half, which again would tie in with a pullback to the 50 moving average on the 4-hour. I'm going to clear this because it's all looking a bit messy and it's just even confusing me. So God knows what it must be doing for you guys. Why is that still there? I really took the long way around that, didn't I? Apologies. So yeah, so if we drop down to say the hourly, remember you can utilize these how you see fit, but are we now starting to see a bit of a bottoming pattern, maybe a W forming there, and an opportunity for this to now come up and retest some of these other levels? We'll just have to wait and see how that one plays out. But I want to just talk, well, let's go back to the daily for a second. Because I want to then talk about this 25k level with that on there. So what have we got with this 25k level? Well, we're back on the daily, as we can see. We've talked on the 4-hour that we may still be in the process of drop two, but we're just looking at this from a daily candle point of view. So just bear that in mind. But we have actually closed below the 50 on the daily, which maybe gives some credence to a move down. So if there were to be a move down, where have we got to go? Well, actually, we've got a couple of big EMAs in our way. So don't just think it's a clear shot all the way down to this vector candle recovery there. That might take a news event to do that, because we've got the 200 and the 800 in our way. We've got the psychological level of 25k. And that is a psychological level at the moment, because every man and his dog is talking about it on Twitter, which is why I put in the poll, where do you think we'll get to first, 25k or 30k? 87% of the poll believe we're going to get to 25k first, which we could. I'm sat on the fence with that at the moment, because I will not, we lose the 27 and then I'll be more inclined to say we'll get to 25. But at the moment we haven't lost 27 and we are continuing to trade sideways within this consolidation period. So let's have a look at high block and see if there's anything that can give us a direction of where we would, a range of where we may go in either of the two directions that we've talked about. Hopefully this is still loaded up. I'm just going to hit run just so it can reset. Right, and then we'll zoom in a little bit. So this is on the 7-day chart. So you can kind of see from the key, the brightest yellow you're going to get is about 4.5 billion. And we got about 4.5 billion sat just under 30k at the moment. So in terms of actually heading up in that direction, we haven't really seen a build-up of that changing colors across this entire time frame. And this time frame goes back to the 8th. So last day and a bit. Not much has really happened in terms of building up there, but we can actually see it's obviously people taking out longs because the colors are starting to change and getting a little bit deeper or lighter, sorry, should I say, in and around here. But again, the vast majority of the noise is just above 26k. Going back onto our chart, I should have probably looked at this a little bit earlier, but I didn't. But there we go, 26,100. So we've got 26,200. Is the 800 EMA? Always have to check this because I never remember the colors. It is the 800. There we go. It's the 800 EMA. So mark that one on the chart. Now this one's pretty flat, but each day it is going to steadily climb. But we've got that area there. Let's change the color of that. So we're going to keep this one on the chart. See what happens with it. Yellow is pretty ugly, but it is what we've chosen. So we'll leave that one there. So that's somewhere where we could see that move down. Bear in mind, it's CPI day tomorrow. Maybe that gives us a bit of a wick down. We'll see. It's quite a move from where we currently sit, but stranger things have happened on news days. In terms of anything above that, I mean, there's bits of noise here, but really, I don't want to say I can't see it getting up to 30k, but it's a different conversation if we do get that high so quickly, in the next couple of days, because that's going to negate a lot of the drop 2 conversation we've just been having on the 4-hour chart, and it would say that we're still within that range from drop 1. So I mean, we can draw it on there, but we know there's a pretty decent bit that was in and around there. That could some people have played that very well in terms of shorting. You think about where we were back end of Saturday. We just pepped into that zone and then rolled down. So they seem to have got a great entry position for those shorts there. So still a bit of work to do on terms of where we're going. I'm just sitting on my hands in terms of the 27k level. What's interesting is ages ago, before this pump up here, I sold at 28k, and I now have an opportunity to buy back in. So going back to Manny's question about have I sold some of my portfolio, I have sold my gas. I sold that at a loss, about 15% loss in USD value, but there was no spiky trades, and we lost a level. I was going to show you that level a little bit later on. Sold some of BTC, as you know. I sold some of my memes, so I'm just in Pepe and Ribbit at the moment. Everything else I've sold. I did relatively well. In fact, my entry position for Pepe is still pretty good, which is why I've held on to just what I've got left of it. Just no point leaving that now. So I've already taken 3 lots of profit from that. Ribbit's pretty much underwater. I think it's probably about 50% underwater, but I only put $250 in, so not exactly a life-changing amount of money. And then I just cleared up before the bank holiday. So I don't think I got the best price for a lot of these, but I cleared up a lot of smaller ones. So if you remember with the AI token, I kept 20% of each of those. I just couldn't be bothered keeping them anymore. So I sold those. What else have I sold? I sold some caps and a few other ones that were just on here that I wasn't really paying attention. The caps had lost quite a bit of money. I think I bought it around about 40 and it's down at 19, or sorry, 4 cents. It's down now at 2 cents. So again, bit of a hit there. So Ryan, I might as well say, why am I not looking at the gas BTC trade? Okay, I'll just bring this one up now that you've said it. Because we're looking for ranges and we've lost. Let me just take all this off. I'm sure I drew it on another chart somewhere. Or I put it in Discord. We've lost this range. This was the bottom that I had been looking at previously. And the break of that, and I just don't know where the bottom of it is now. And we could end up going similar to what we did back in May 22. It could just now fall. So Previous times we've got to that low, we bounce back away from it, but not anymore. We've fallen. With the strength that BTC is showing at the moment, and altcoin's not really doing much, it just didn't feel right to continue to hold on to that. I didn't get the worst. I got out at exactly where we are now, $2.79, and I think I got in at $3.30 or $3.36. So, like I say, it's like 15-20% loss on that. But you know, you win some, you lose some, and I'll just see where it goes from here. It's only a BTC play, so. I just have to take that one on the chin. And then if it falls a bit further, I'll look to reestablish. But right now, it's just difficult to try and pick a range. Bear in mind, it's a spike event. It's not just about getting in at the price. I've got to get 20%. So you can kind of see where some of these trade alerts were, 20, 30, and 40% for my entry position from a BTC value. Now, the BTC value in the month or two that I've held it for has absolutely capitulated. I think I got it in at like 11.50, and it's already down to 10.11 now. So... yeah, just seemed like the right thing to just cut your losses on it, and just, you know, protect that capital. For those of you with that cuddle back in November, you know, surviving the bear market, surviving trading below bear market is protecting your capital at all costs, not being married to a decision. If you don't like the position it's in, just get out. And so that's what I did. So yeah, live and learn from the next one there. So that's probably it with BTC. I'm sure I'll have some other thoughts when we get to it again through the other side. Just one final thing with sort of the sentiment at the moment, because there does seem to be that sentiment shift now. You know, it was what, only 2 weeks ago where we were over 31,000 and everyone was so bullish, and now it just feels like we're back at the low 20s, sort of psychologically where crypto is. And I think people have just got too much into that, especially after the meme pumps and everyone getting excited with that and what that kind of did for people's mentalities. And then we're back with a bang. Bitcoin's had 4 days of falling. I mean, how much have we lost over the last 4 days, percentage wise? Yeah, top to bottom, 8.5%. So, you know, we've had a lot worse days than that, but it just feels like it's ebbing in. And we have a look at Fear and Greed Index. Put it on max. Sorry, I'm trying to put as many things as I can on dark mode, but you'd be surprised how few have that opportunity. You know, one so long ago that we were at 68 and now we're at 51. You know, we're getting right back into the middle of the neutral territory and falling through. Now, again, if you were to draw some TA on this, potentially there might be a line of support what we're currently hitting at the moment. So maybe we do see a bit of a bounce, there. But again, you know, it's definitely waning. It's coming down. If we were to just solely look at this, which I don't really treat as an pinch of salt, but we lose a level out at the moment. I think if we lose 27k, go down to 25, I think there's going to be a lot of people who get pretty nervous about that. I could see us falling into the low 40s, maybe even the high 30s on the Fear and Greed Index. And then that with it brings its own problems of just, you know, where people go with that. But I just stand by, wait to see what happens with 27. 25, I feel like, is a healthy place where it should go, just to retest that previous support and then kick on there. In terms of the higher time frames, I went into it in more detail last week, but I am expecting at least one more large push up on the daily, but that could take a month, if not two, for that to play out. So don't think it's going to happen anytime soon. Right, I think that's that. Tell you what, let's just cover Pi cycle. Then we got that out of the way. Then I'll go into the two research tokens, and then we can do some charting at the end. I think that's probably the best way to do it. So this all came about from a conversation that Anita Smith asked on Discord about whether or not Simon had a profit-taking strategy, an exit strategy for the next bull run. And I sort of kind of talked about in the past, but I don't just rely on one indicator when we get to the top of the bull run. And I'm speaking as if I left at the exact top of the market, which I did not. Mainly because greed took over, and some of the indicators that I looked at, I just decided that this must be the time that they're wrong. And this was one of them. So this is the Pi cycle top indicator, which if any of you are around and you watch YouTube videos around the end of the last bull run, this was talked about a lot. And so you may have heard of it. Now, it was created by a guy, I think it's Philip Swift. Where is it? It says down here. Yeah, Philip Swift. And he created in April 2019, and that's important, so we'll go back to talk about that in a moment. But effectively, it's just 2 moving averages. So it's using the 111-day moving average, not one that you would find as a default setting, and then a newly created 350-day moving average, but it's times 2. Now, that doesn't mean that it's the daily part of it, or the number of days is times 2. It's actually the value of the price at those days is times by 2. You put those together, and the reason it's called the pi cycle is 350 divided by 111 is 3.153, which is relatively close to pi of 3.142. So that's where it gets its name from. Why is this interesting? Well, look into Bitcoin is a pretty bad chart to have a look at, but effectively what you're looking at here is the orange line. Sorry if you're struggling to see this. I will zoom in close to where we are, but it is a really naff chart afterwards, so just bear with me. Let's zoom in here. So the orange line is the 111 daily moving average. The green line is the 350 daily moving average. And what you're looking for is where those two cross. Now, this is represented by this dotted line here. Don't worry, I've got it on TradingView, so we'll have a look in a moment. You can get this indicator for free. But effectively, where those two line crosses historically have indicated the top of the market within 3 days. Now, we just reset this back. This goes all the way back to 2011, but I told you that this actually hadn't been invented until 2019. So, although there was a cross here, where was the cross? I think it was here. Actually, this one is well off. I don't know why people have said it from there, but okay. I'm already going to disregard that one there. I'm going to look at this one here. So where the cross happened here, I'll zoom in on the other chart later, but where this cross happened, within 3 days, the market topped and then it crashed, corrected. It crossed again. Where it crossed within 3 days, either side of it, it was the market top. It crashed again. It didn't cross again until December of 2017. And where it crossed, amazingly enough, that very day, it was the market top. But this indicator was actually created after all of those. But what he had done when he had created this indicator was it showed that over the previous bull runs, it had identified the top within 3 days. And it was, that's amazing, you know, interesting. Now, people, including myself, I think there's definitely an Avenger call out there where I've said perhaps he has fudged the figures to fit the narrative, because that's what you worry about. When it's untested with real data, how do you actually know? It's a bit like back testing. Always looks good, but when you then actually go and launch it into the real life markets, it never seems to work out the way you want to. But in absolute credit to this, where these two then crossed in April, so the first top of 2021, it crossed, and then 2 days later signaled when we got to 64k, and then we had that big correction. Now, it could be argued, and I've seen people argue this, and I can understand the narrative behind it, is that the November top. Now, if you actually looked at that, that was, it beat 64,000 by on like a 2 hour or 3 hour candle. I think it actually closed on the daily. It might be the weekly. I might be speaking out my bottom there, below the 64k, and so you could argue that that was a blow off top. That second phase that we see in a bull run that just got a bit out of hand, and so it wasn't necessarily there. But you can tell, because we had such a big fall over the summer, the gap between these two lines had grown quite wide, so there was really no chance that they were going to close in on each other for that top. And then it got wider and wider. Let's have a look at this on TradingView now. And so this is a culmination of two indicators. I'll just show you where they are. So if you just type in here pi cycle. So I've used the pi cycle top indicator, and that gives me these red ribbons to show you where the pi cycle top is. So that is by Blitzerian candle 2466. That's how many users have used it. And then I've also used this one, the pi cycle top indicator by Fly 787 903, and that gives me the lines. The lines are correct, they are the right settings, etc. So we can go from there. But if we just zoom in now, so you can kind of see these a little bit better, you can actually see how accurate it was. So again, I got to zoom in really close, you can actually see where it crosses, and then try and get. So followed up. And it crossed, I think it's this candle here on the 11th, and then 1, 2, 3. Oh, it says the pi cycle top. Oh, that's it. That's the day it crosses. So it was actually on the 12th that it crossed. And then 1, 2 days. This is the candle. That's what happened. So that's the April one. And then if we zoom back to this one here, this is going to be really hard. I'm going to have to just squeeze this one down. So the pi cycle top happened. The cross happened on that day. And then the next day we saw that wick just get ever so slightly higher for the market top. So it did it there. And then similarly, you get the point. But similarly, I can't find it because I should have just squidged this one here. So we had high cycle top. This time it was this candle before it, in which was the actual top there. So it does seem to work. Now, I will have this. I've got a set of charts that give me long-term indications. I will have this on my charts. And you can be sure as anything that I will use this as an indicator for confluence to decide whether or not I'm going to exit the market. I won't probably exit all of the market because I know human nature will take over. Even if the price is at 100,000, people will be screaming 350,000, and I'll, be trying to temper my emotions, but it's hard to do in reality. But I'd like to think that by utilizing things like this, by utilizing USDT dominance, just general euphoria, and if it does look like we're getting close to a cross, at times where USDT dominance is starting to climb, so Bitcoin dominance against that is starting to decline, and there is a decent amount of euphoria, then it feels like that might be a logical time to at least take some risk off the table. So yeah, this is something that I've followed since 2019. So don't get me wrong. By the time we get to 2025 bull cycle, I will be talking about this quite a bit more. So yeah, that's where we are with that one. So Anita, I hope that helps. And for those of you who've never heard of it before, it's a very brief introduction. If you're going to look into Bitcoin, you can have a read of the narrative behind it all. There's plenty of YouTube videos on it. People who utilize it. So there is a bottom one. I don't think that's actually played out very well. So I don't think Peter Swift created it, the bottom indicator. So I don't even bother looking at that one. Okay, so that's where we are with that. Let me just see if I've missed anything. Okay. So there is some FTB 100% mortgages. Our poor paying rent for 1 year is not the same commitment as owning a house. I was a mortgage broker in 2008 and remember how it went 100% mortgages and a decreasing property market disaster once it came out. The initial 2-year deal and can't be a mortgage. Yeah, it sounds exactly like it. It's definitely a slippery slope there. And it's like those who fail to learn from history are doomed to repeat it. And it just feels that we have just, we've gone back in time 15, 16 years, but we are where we are with that. I don't think there's an opportunity for spiky fades. The BT dominance isn't rising so much. Certainly not getting those large ones. But what I would say, sorry, just to go back to that. Whoa, that's pretty ugly. Just put this back on the weekly. Oh, what's happened? Is this one occurred in February when BTC dominance was happening? So maybe I get your point. But since then, yeah, we've seen some spikes, but nothing monumental. So I'm out. I'll just take the hit. Simon still has his gas. I believe so. I believe so. Right, Bijan, I'm glad you're on. So I'm going to do your 2 research tokens now. I really thought this would be a walk in the park just doing these 2, but not that one. Here we go. I'm going to start with OKB, although this one's a bit down, because I think this one's probably a little bit easier to talk about. So Bijan last week asked me to have a look at a couple of exchange tokens. One of them was OKB and the other one was BitDAO. Now OKB is a token that I own. It's going to be my exchange token for the next bull run. I was quite interested in doing some research on this because there are some questions about the tokenomics, which I'll go into. But generally, I like the exchange. I think it's growing in the user base. It's positioned itself in a market which I think is about to erupt. And if that is the case, then I think there's some positivity in terms of its growth. And when I show you how the chart of it's done over the last 2 years, I think you'll be kind of blown away in which direction the price has gone. But talking more about the token and the exchange. So OK Exchange is the exchange we're talking about, which launched in 2019. It was originally based out of Malta, but it is, I don't know if it's still there actually. But anyway, In terms of the size, oh, not that one. There's a. So if we go to top cryptocurrency spot exchanges, we can see that OKX is currently sat in 6th in the rankings. Now, the rankings take into account a whole range of scores. That's from traffic to liquidity to trading volumes and confidence in legitimacy of the trading volumes performed. We can actually see in terms of trading volume, in the top 13, it's actually second. It's second only to Binance. It's even higher than Coinbase. It's got a decent number of coins on it. You don't expect it to have too many. It's got 340 to Binance's 385. Everyone always seems to think that Binance has absolutely everything, but it doesn't have that many. KuCoin, Gate.io, they're the ones that have the large ones, a much smaller cap coming in. In terms of weekly visits, it's 2.2 million. And look at Coinbase, only 35,000 weekly visits. So it's amazing how big this one is in terms of where it can be, and I think it's a real good opportunity for it to get bigger. Now, in terms of the user experience when you go on there, it is very much like a hybrid between Binance and Bybit. So it's fairly simple to use, fairly simple to track your assets, to trade. You can also do derivatives trading. I think you can do futures, staking capabilities. There's all sorts of things that you find. You can do earn, you can loan, all that kind of stuff. So they really are capturing an awful lot of different markets to try and build their user base within there. They've got some pretty big sponsorships. For those of us in the UK, they are, I don't know if they're the main sponsor, but they are a main sponsor of Manchester City. They're also a main sponsor of McLaren Formula One team. So again, quite a lot of publicity that goes out of there. What was I going to say? Sorry, I've written some notes. Oh, sorry, I couldn't be bothered typing up on the computer. I was just handwriting them. Right, so in terms of exchange tokens, for me, there's always a few things when looking at an exchange token. It's not just going, oh, well, that's an exchange, so I might as well buy it because people are going to use it. There's got to be some use behind the token itself, and there's got to be some positivity behind the exchange. So there are a few things that I tend to look at, which we'll go through in a moment. So the exchange itself, I've already spoken about the exchange. I think with China opening up, and bear in mind, when we talked about the Chinese invasion back in February, we were talking about the end of May, beginning of June. Well, you know what? It's the beginning of May and it's almost the beginning of June. So when we're talking about Hong Kong opening up to retail, we're talking weeks away now, 3 weeks until this opens. That doesn't mean the floodgates are suddenly going to open to OKX, but there is then a significant opportunity for funds that potentially been on the sidelines beforehand to enter the market, and potentially exchanges like this could benefit from that. So yes, we look at the exchange, we also look at market cap, and we look at circulating supply versus total supply, kind of the tokenomics type of things. We want to have a look at trading perks. This is an exchange token. What are the trading perks that you get from this? What are the perks in general? What are the perks you get from a crypto world? And are there actually any perks you can get through partnerships? Do you get to go and see a McLaren race? Unlikely. And then tokenomics, an actual breakdown of the tokenomics itself. So I've kind of gone through a few of these and, tried to understand where it is, where it sits, where I like it. But before we go through those, let's just throw up CoinMarketCap. I don't know if any of you have been on CoinMarketCap, but some tokens, if you type it in, it gives you a completely different layout. So it looks more like this now, rather than some of the other ones. So it can be a bit thrown, but whereas the information used to be sort of in the top right-hand corner, it's now in the top left, what we want to be looking at. The current price at the moment is around about $45. It's got a market cap of 2.6 billion. It's got a reported circulating supply of 60 million tokens and a total circulating supply of 300 million tokens. So around about, quick maths here, 20% in circulating supply. We will revisit that a little bit later on. We talk about the tokenomics side of things. But if you just have a look at the chart, so this is its entire time frame. So 2020, is this right? Yeah, 2021. We saw the dip, but since the summer of 2022, this thing has only known climbing, and it's gone from $11 to the highs of 55. So for something that's in the top 50 of tokens, we've seen a 5x over the last sort of 12 months, which is At best, we've generally seen about a 10x, about a 10-20% increase, if not altcoins falling away from that kind of level. So it has started to see a decent price uptick. And this is kind of what excites me, because if it's going to be anything like Binance, if it's going to continue to eat into that market share of Binance, then, are we going to start to see the token price start to climb like we saw? Now, Binance got to $600, nearly $700 in the last bull run. I'm not suggesting OKB is going to do that. But if it can take a decent chunk in there, and if it can sort out its tokenomics, which we're going to talk about, then actually there's a good potential here that we could actually see a decent price growth as the user base continues to grow of this exchange. And I go back to that point of just it, sort of where it's positioned itself, markets that it's looking to position itself within. I'm going to call it the Far East market, but the news is more about Hong Kong opening up on the 1st of June. But the avenues that could present an exchange like this, which, as I said, has spent the time to create a usable UI, easy to use, sort of decent trading volume on it. There's not too bad slippage on the vast majority of the tokens, etc. It's got sort of some credibility over the years, got some good backers within it, and some good partnerships which can advertise it on the main stage. So yeah, now I've thrown up a few of these other ones because I can never trust CoinMarketCap. But interestingly, we've got a similar kind of conversation going on here. Circulating supply is still 60 million tokens. Max supply is 300. Total supply is 246. Again, I'm harking on about tokenomics because there's something I want to talk about there a little bit later on, a number of tokens that are going around there. And Masari is kind of showing a very similar point of view. So it's a utility token for OKX. Well, what does that actually give you? Because ultimately, that's what we want to understand. And this is where I go back to Binance, because whether or not they did it deliberately or it's just, they've fallen upon it, but it has kind of mirrored Binance in a lot of ways there. So the token OKB offers you, well, I've just got the notes here for it, but it offers you trading fee discounts, similar to what BNB does. It can offer you passive income with the OKX Earn, so you can do some staking with that. You can also do some sort of like VIP loans and a few other things within it. And it also gives you access to their launchpad. Now, they call that Jumpstart, but effectively, if anyone wants to list a token on an exchange, so you've heard of terms like ICOs and IDOs. Well, this is an IEO, so an initial exchange offering. So where a project is utilizing the ecosystem, in this example of OKX, and so they actually get launched off the exchange. And what would do, if you want to take part in that to get some tokens at pre-sale, you would have to have a certain amount of OKB token, which would then be entered into a ballot and then converted into whichever project you were looking to go into. So holding the OKB token is a necessity if you want to get on the launchpad. So we've actually already got 3 or 4, I've mentioned 3 at the moment, genuine uses for people just utilizing day to day with this exchange. The other one, the final one there, is governance. Now, it's not like, oh no, it's governance because people can, vote on what decision it wants to do. No, this is governance to vote on which tokens get listed on the exchange. So for every OKB token you have, you get 1 vote. You can put forward tokens to be listed on there. There's obviously due diligence that goes within it. They get put forward, and then people can vote if they think it should be listed. So, there's obviously some use within that there. Now, I've never actually delve in to see how many votes get put down for something to be listed. So I don't think you can just put any willy-nilly token you want on there. 5 votes will get you listed. But there is that option to do that with your OKB. Let's just move through here. In terms of the trading volumes, you can just go through and actually have a look at this, but it's very similar to Bybit. For those of you that have either traded spot or derivatives on Bybit, for those of you who are dumb enough like me and traded a shed load, you've got sort of VIP status, so different VIP levels, which gave you different maker and taker fees. And this is exactly the same kind of mentality within there. And it kind of gives you a breakdown of how those maker taker fees, depending on either how many OKB tokens you have or how much USD you have within the bank and your trading volumes. So it's all broken down fairly simple. So this for me is a bog standard, no, that's not a run of the mill exchange token. I just happen to think it's on a very good exchange, which I'm not necessarily saying it is undervalued at the moment, but I think it's got a great opportunity to really stretch its legs in the coming months and years as this exchange grows, the user base grows, the requirement to have OKB as a token is just going to drive that price up. So I like that. In terms of other things that OKX offer, which you can utilize for OKB, so a bit like Binance, again, you're going to see that. I'm going to take this white screen off, it's blinding me. Bit like Binance has their Binance Smart Chain. Well, actually, you know what? OKX launched their own, which is the OKX chain. And so again, the token of choice for fees on that, you've guessed it, is OKB. So it has a an ecosystem within that which you can utilize. Now, it started off its life as an ERC20 token. As I understand it, it still is, because I was able to stick it on my MetaMask. So how that's migrated across, I haven't really delved into that at the moment. I've just stuck it on my MetaMask there. There is a burn mechanics within this, which is very good, very useful. So it means that it does become deflationary. And they do that through these periodic buybacks. And what they effectively do is they send it to a burn address. Now, if none of you have ever experienced what a burn address is, it's like a void address. It's an address that no one has access to. It's only got loads of zeros within it. And all they do is they just send the tokens there and they're effectively lost forever or burnt. And then, yeah, so that's how they do that. And wouldn't you believe it? That's exactly what Binance do. But the buyback mechanics is relatively good. Now, where the hell is it? This was Binance. I was just having a look at that. Nope. I don't know why I didn't bring it up. That's annoying. Let's see if I can find it. Yeah, okay, here we go. So before I go into the buyback mechanics, I've got two problems, I suppose, with this. I will be overlooking both of them because I've already bought this, so I've already made that decision. First one, not a huge problem, but there isn't a white paper. So there is a white paper for BNB, but there isn't a white paper for OKB, or if there is, I haven't been able to find it on this website, on forums, on white paper listing websites, etc. So I haven't been able to readily find one. And that actually is a problem because there is some inconsistency in the information that's been presented about the initial supply of OKB, the circulating supply, and now the max supply. And because there's that, because there isn't a paper that I can just go, this is what was originally supposed to be, this was how it was going to work, this is the inflation rate, this is the burn mechanism. I'm actually having to rely on piecemeal articles or graphics like you're seeing on the screen at the moment to give me that information. Now, the vast majority of that information is provided by OKB. And so, you know, I prefer to verify my information rather than just spouting it. So I have to kind of go off this, which makes it quite difficult because if we just look at this chart here, and I'd like to think that OKB and OKX know what they're talking about here. So they're saying the total supply is 300 million. Yep. So that's undisputed. That's what we had here, 300 million total supply. But they've said here the circulating supply, both on CoinMarketCap is 60 million, on CoinGecko is 60 million, and on Masari Metrics, let's have a look, supply is 60 million. But when you go onto their website, it says the circulating supply is 241 million and that they've burnt 60 or just under 60 million. So I'm kind of like, okay, well, where does that leave me? Because that's a big difference there. You know, it's a 4x in amount of tokens, and that can significantly change either the market cap or the project, or it's going to have to take the value of the token down by 4. So where does it sit and how do I try and work that out? Well, first of all, I was like, okay, let's have a look at the buyback and burn mechanism. Let's see if that is going ahead and if it is working. And it is. So you can click here, you can have a look at the view reports. So we'll just click on the latest one. So effectively, it kind of goes through here what it does, but this was the 19th round of the buyback and burn, which was effectively between the 1st of December last year and the 28th of February. So we are due another one fairly soon. And they burned from the secondary market 5 million, just over 5 million OKB, which is around about 177 million calculated on the 90-day average. So we're not talking small change when they do this. This is large, huge amounts. You know, it's what, like 1.5% of the overall market cap was burnt in that one instance. As I say, they do it every 3 months according to the seasonal market operating performance. And what they actually do, I've written it down here, is every 3 months they burn 30% of the income that's been generated from the trading fees. So from the OKB that's been used for the trading fees, that's what they burn. So we can actually see that if that's only 30%, they are going through an awful lot of OKB in terms of income from trading volume, which is great to see. We can kind of see how it's gone in the past, and you can add all those ones up, and that gets to the 58,545 OKB. So again, in their document that was released 2 months ago, they have clearly said that they burnt 58 million, and the OKB in circulation is 241 million. So I'm still lost as to what to go with, because, and this is where it's funny how your mind runs, but there's a reason there's a cat on this image, and that's because I don't know if any of you have heard of a quantum physics thought experiment that was done by a guy called Schrödinger back in the 1930s. It's called Schrödinger's cat. And to just dumb this down, because it's a crypto call, not a quantum physics call, basically the thought process, the thought experiment he put in is, he said that if you were to put a cat in a box with in this example, it was a radioactive substance that had a 50-50 probability of it emitting this substance over any given period, and then you sealed that box up. When you came at the end of that period, prior to you opening the box, you didn't know whether or not that cat was alive or dead. And so actually, from a scientific theory point of view in the thought experiment, it was in both states. You could argue that a cat was both alive and dead at the same time. Why have I just told you about that? Well, it's because we need to try and understand what is going on with this circulating supply, because we now know there are 241 million tokens somewhere, but everyone seems to only be reporting 60 million of those. And the market cap is based on 60 million. So you take that price there, you times it by 60 billion, it gives you that market cap. If I was to times it by 241 million, that market cap is going to be what, 10, 12 billion? 10, 12 billion will take this token to 7th or 8th on the charts, not 28th where it currently resides, or 26th where it currently resides. So why aren't we counting the full experiment? And sorry, just to go the other way from that, if we are going to say that the value is 2.6 billion, but there's that many tokens, actually, should the price be 44, or should it actually be $11? And then 11 times 240 is going to get you 2.4 billion. So that's the risk then, because I bought it at 40 or $38 when I bought it. So I don't want it to drop down to 11. So where does that sit? So I tried to do as much digging as I could in terms of where it goes. And this article kind of talks about where it is. I think if you're interested in OKB, this is definitely an article you should read. I will post it in Discord afterwards. But it goes on to talk about the difference that I've kind of just explained. It says, well, where is this missing 10 billion? And we scroll down because they talk about these wallets. So effectively when the token issuance started in April 2019, there was 220 million OKB. That was set up in hot wallets, thousands of blockchain addresses. They've never seen any transactions. So over a very short period of time in April 2019, it does tell you, it does tell you somewhere in this article how many tokens, but it sent it to 31,000 addresses were sent to these addresses. And since then, they've never been touched. It's never moved from there. And so their argument, or CoinMarketCap's argument, CoinGecko's argument is they've never moved in 4 years. So would you really consider them to be in circulating supply? They don't consider them to be in circulating supply. So that's why they cap it down at this 60 million. That sounds all well and good, but what happens if tomorrow OKX decide they are going to move those, and they're going to move them just from those cold wallet storage to the hot wallet? They don't do anything with them, but suddenly you get some movement. Are we now going to see CoinMarketCap and CoinGecko reevaluate how they assess the amount of tokens that are in circulating supply? And if they do, which way are they going to do it? Are they going to favorably move it so they move the market cap up, or are they going to reevaluate what the price is and move that down? So there's a potential worry. I would assume they're going to move it up, the market cap up, rather than anything else, because we are seeing that these coins, or these tokens, sorry, are being traded at this price. It goes through all of the different addresses and dormant, where it is in terms of different hot wallets and where they move from hot wallet storage to cold wallet storage, and how that sort of distributes through. So I have overlooked that and I have gone and bought it. For me, I like OKB. I don't think anything I'd done, trust me, this was the deepest dive I did in it prior to me buying it, has really put me off from that. I just have this unknown question. And don't get me wrong, this could be any token. Let me get off this bloody white screen again. This could be any token in terms of, and I'll use, I tried to have this conversation with Simon, for those of you on the trading pub, Casper as a prime example. You know, Casper's price, what it is, and given how young it is, it's brilliant, amazing, whatever you want to term you want to use. Like, I'm trying to find it now. I don't know where it is. I'll have to just search it a bit. But it was in the top, it was like 85 or something, wasn't it? And because what they were doing is they were utilizing, well, what number was it? Or is it? Stupid new system. I can't find out where it says it is in the charts. Someone's going to point it out to me whilst I talk. Anyway, wherever it was. Because all they've done is they've taken the price that it gets traded at regularly and multiplied that across the current circulating supply. And so that gives it a very high market cap. But with something like this token, we know that the vast majority of these tokens have never actually seen the light of day of an exchange. And actually, they get mined by you and I. You know, people that just mine it with their, you know, current level of processing power and just store it in a cold wallet. And so actually, you could argue, bit like I'm trying not to argue with OKB, that the market cap has been inflated because there's a very small percentage of the circulating supply which is being actively traded at a set price that then just then gets rolled out across the entire market cap rather than the real circulating supply. And if the circulating supply for, say, CAS, or I mean, it'd be the same for Bitcoin, don't get me wrong, there's millions that have been lost or locked up. But going back to this example, if the real circulating supply of CAS was aligned to what it actually is in terms of the sum of KuCoin and Mexi and all the other ones, would we then see either the price have to skyrocket up to keep the current level of market cap, or what's probably more realistic, the market cap would drop significantly and then it would tumble from, if it is at 85, I still can't find it on this bloody new layout system, if it is on 85 or actually it ends up going down into the low hundreds or even lower. Come on, you've got to be able to see it somewhere. No one's helped me, so yeah, okay, I don't know where it is, but someone will find it afterwards. So anyway, so that is OKB. So let's have a very quick chat about BitDAO. So I didn't know really anything about BitDAO. So I've come into this expecting it to be the Bybit equivalent of OKB, but it isn't. And it's nothing like it, actually. And the biggest giveaway is in the name, because this is called BitDAO. Now, for those of you who have been in the group long enough, you'll have some sort of experience of DAOs. Now, your experience is probably rebasing DAOs, but this is a DAO nonetheless, a decentralized autonomous organization, which effectively means that it is not a company, it's not run by an individual, it is run by a community. All decisions are voted upon and then they are put into action. And it is, it's a relatively good way of doing that. So why do people call it a Bybit exchange token? Well, let's just be clear. Bybit do not own this token. This is not a Bybit token, and it doesn't work like an exchange token like I've explained for either BNB, for KuCoin, for OKX, or OKB, should I say, etc., etc. Bybit are a very, very significant partner within BitDAO. And because of that very significant partnership, they have a shed load of these tokens. I'm not saying that's a bad thing. I'm just trying to reiterate. They just happen to own a lot of these tokens, but you can't use BitDAO to reduce your trading fees. You can't offer that up as collateral to then take out a loan, etc., like you can do with OKB. They just happen to have this, and they do have some use cases on their platform for which you can utilize BitDAO predominantly on their launchpad. I think I should call it launchpad. or whatever they call their launch pad for starting new projects, which we'll go into a little bit later on. So right off the bat, this actually isn't an exchange token. So if you were looking at this to try and fill a niche for exchange tokens, you're probably going to have to reevaluate if this fits in your portfolio now. And again, I'm not saying that this is a bad token because it's not an exchange token. It's just the fact that it isn't an exchange token. So that was a bit of a surprise for me. Our goal is mass adoption of decentralized and token governed technologies. So basically they're creating an ecosystem, and they have a fund within that ecosystem, which isn't just BitDAO. You'll be happy to hear. They've got Ethereum and Bitcoin and loads of other tokens, and they've got a massive, I don't know what you call it, runway or fund. You know, it's huge. When you have a look at it, you'll be impressed with the size of it. But basically what they'll do is just people will, approach them and say they've got this idea, they'd like to start within their ecosystem, and then they'll get funding, or they'll put a proposal forward which is voted on, and if it's approved, they'll get funding from the DAO to try and build out this product, and then launch from there. And then they can utilize the Bybit launchpad to get funding, further funding for seed rounds and pre-sales and everything else. And then guess what? When it actually launches and just on a public launch, the first place you're going to be able to buy this token of whatever the project is going to be on Bybit. And if it goes well, I'm sure it'll go to other exchanges. But that's kind of where that sits. In terms of the tokenomics of BitDAO's currently sitting at just under 50 cents. It's got a market cap of just under 900 million, 24-hour volume of 5 million, and a circulating supply of 1.8 billion tokens with a total supply of 10 billion. Again, we're going to get into this, but there is a bit of a Schrodinger's cat situation with the circulating supply versus the total supply, which again, I think I understand where that one is, because this one has governance and lockups and everything else, but we'll go into that a little bit later on. So in terms of what it is, it doesn't have a white paper, it has a light paper. It's accessible through the website. So very short paragraphs on what it is, and it is just like any other DAO. So aims to support builders of a decentralized economy. So again, people can put forward any projects that they want to build within that ecosystem. If it's approved, they'll get funding, and they can then utilize the wide range of the ecosystem to build and then grow from that. So it has a governance mechanism, the BIT token, as you know, and it's much like any other DAO you've been involved in. Even the rebasing DAOs of like Ohm and Time, there were governance and you could vote on them. Whether or not you actually did, it's another matter. But you can go through proposals from the forum, official proposals in the governance modules, and I think they're called like BIPs, BIP 19, because there's a new product that's been launched called Mantle, which, if you are interested in this, you do need to read up on Mantle, because they're going to kind of like restructure the entire, what's the term I'm looking for? Probably marketing, but also how they go about stuff based on Mantle. So it's definitely worth reading up on. I'm not going to bother going into it on this talk, but if you are going to get into Bit, read up on Mantle. That's my top tip. So all decisions from launching new initiatives to transferring and recalling treasury resources, assigning and modifying powers to operating teams, and implementing corrective actions are subject to proposals and voting. So every decision is done via voting. So that's whether or not we dump our Ethereum and turn it into USDT or USDC or whatever, or we buy Bitcoin with it or whatever, it's all put to vote. And yeah, you can just go through all of that. I mean, it's fairly well read out. You can have a look at some of the previous ones that they've sort of gone through, and some of the changes that they've made within the token and the tokenomics, etc. Delegation there, and then we'll get into the tokenomics. I'm going to come back to that. There's a graph somewhere. I don't know where it is. Let me see. I was hoping it's somewhere here, but it doesn't look like it is. So I might have to. Oh yeah, this is it. Okay, so in terms of the partners, this is kind of important of where we are. So back when they started this, back at the beginning, there was a private sale which took 5% of it. Some of the launch partners were given 5% of the token supplies. This is the full 10 billion tokens. The BitDAO treasury holds 30% of it, and it pretty much still has that 30%. Then Bybit got 60% Okay, so that's what I'm saying. Bybit was such a huge partner, and people always associate this with Bybit because they have 6 billion tokens of that. 15 billion of that was flexible, so it had no vesting period, no lockup period. Once this thing went to public launch, they could launch it, and then the rest, 45%, had a 12-month lockup period, and then it gets released initially over a 24-month period at a set rate. We'll go through the tokenomics there, but just to stress, Bybit has a huge amount. One of the launch partners was SushiSwap, as you can see down here. So SushiSwap, I'm struggling to even say that word now, SushiSwap, gave them a lot of advice and help in terms of setting up the DEX and understanding how those tokenomics were going to work. And the SushiSwap DAO really helped them in developing their DAO. So for all that work, they got 2.6%. They didn't have any tie-up periods within that. So again, they will be within the circulating supply at the moment. And yeah, it goes into all this data. Now, what is not interesting, but I did it because I wanted to make sure that it was right, is there's a schedule down here of the 45% that can be released by Bybit. So 45% of 10 billion, you don't need to take your socks off for you. That's 4.5 billion. So this launched in July of 2021. So 12 months later, that 12 months lockup period gives you to July 2022. They originally had 4.5, and then that month they were able to release 187,500,000, and that kept on going. And where are we right now? Well, we've actually just done number 9. So we should have, Bybit should still have in their wallets 2.8 billion Bybit tokens. And you know what I did today? I went through all of these. I won't bother doing it again. Open them up. There was 45 million. I went through all 10 of their wallets, and lo and behold, they had 2.812 million tokens within there, which ties in exactly where they should be. And in a week's time, it should go down to that amount. So they are sticking to their release schedule as they're supposed to. So we kind of know by 2024, we're going to be pretty close to 100%, 10 billion out in circulating supply. Now, one of the things that they went and voted on, though, is they didn't really want 10 billion. So there is now, they did bring in a burning mechanic. Now, because it wasn't originally created when they created the token, it's an ERC20 token, they actually use a generic burn address. So when you go and click on it, if you're ever that interested in doing that, is it here somewhere? It's got all sorts of tokens within it. And it's because apparently this is just one that a lot of exchanges happen to just use if they didn't have a burn mechanism in the initial protocol. So again, you can kind of see where they send that to and burning it. And we're going to go through in a moment where we've got to on the tokenomics side of things. For me, because I thought this would be a really easy token to research, I just went to the frequently asked questions as I read through that. There's quite a lot of decent information in terms of just some of the obvious questions you may ask if you're particularly interested in this. So I'd recommend just having a look there. In terms of the treasury that I talked about before, so their treasury actually holds 2.5 billion. It's one of the biggest DAOs in the space. So, I think DAOs generally get a bit of a bad rep because of the rebasing DAO. But, this is, they're trying to take a different approach in how they're going to manage it. And, the idea behind how DAOs work, so it's open to the community, then I think that's great. I think there are ways of it being manipulated. The fact that for every one token you have, you get a vote. Well, I'd like to see how that works with Bybit and their 60% voting power on things. That hopefully has some sort of agreement within there, so they can't do that. Sorry, my computer is pinging. So here we go. So get to know your bit. So this is just what I wanted to kind of show you at the moment, because going back to these figures again, we've got 1.8 billion of bits in circulating supply. You go to CoinGecko, we've only got 1.4. So then we're talking about either 18% or 14% of the whole of the tokens in circulating supply. I go to the BitDAO website and I get a completely different story again. So we know we don't know, but I'm telling you, 780 million have been burnt to date. We know Bybit have 2.812 billion not in circulation. I've gone through the wallets to prove that. Over 30% is held in the treasury. So 30% would have been 300,000. They've obviously gone and accumulated, sorry, 3 billion. They've obviously gone and accumulated 465 million more. So that actually leaves 2.9 billion in circulating supply. Well, wait a second, that's double what CoinGecko are telling us, and it's another billion on top of what it's. So where is that? What does that actually mean? And to be perfectly honest with you, I don't know the answer to that question, because again, you go down here, it says circulating market cap is 1.4. So where is that 1.5? If it's not held in the treasury, it's not been burnt, and it's not in circulating supply, it must be from either the private sales or the Launchpad members. Okay, well, that's fair enough. We can have a look at that. And I've been showing you this website plenty of times before. This is token unlocks. It's beta. It's a very good. For anything that you know has regular unlocks, you should go on this. Glimmer's got another unlock in 2 days time. But you can go on this and you can have a look. And we can have a look at this vesting schedule down here. So when I hold on it, unfortunately, it gets covered. So I'm going to talk about it first, and then we'll go into it. So it's saying that there's 27% of tokens that are still locked up. Well, we know Bybit has 2.8 billion, which is effectively 28% of the lockup. So what this is telling us is the only amount of tokens that is not locked up in either Bybit locked, the BitDAO treasury, the private sales, or the launch partners is the Bybit locked, or the proportion left of the Bybit locked. So wait a second, that still doesn't answer my question. So if we were 1.4 billion acknowledged circulating supply, but 2.9 billion is referenced elsewhere, where actually is that token? It's not held in the treasury. So I don't know, I honestly don't know where it is. And that, again, is a bit of a concern. But going into the vesting schedule, so we can see the pink line tells us where we are today. And I'm not going to hover over it, but you can kind of see the orange. Let me zoom in. Let's try and make it a little bit bigger first. There we go. So the orange and the black boxes, or the orange and the gray boxes, before the token even launched, or when they launched, you can see that all of those were released onto the market. So that was $2 billion worth, $2 billion bit token. And we know that because it never got any bigger. It's the full chunk and it was gone. Then what we started to see is the BitDAO treasury started to release some of theirs. And you can kind of see now as I hover over it, as these increments change, you can see it's starting to build up. And you start to see private sale because they had a 3-month lockup period. Same with the treasury. So they, couldn't release into the market. You can see this because I'm going to scroll up so it stays on there. And then we get to 12 months and suddenly Bybit locked starts to spring into action. And you can kind of see where we get to today. So what this is saying today actually is there should be 7.3 billion tokens floating around somewhere. And if you were to add up all of those previous ones, that's what you're going to get. So you'd have to add them all up. But if you were, that's what you're going to get with that. I've lost my page now. So I'm laboring the point there, but if someone can point it out, because I just didn't spend enough time to look at it, I don't know where those other tokens are. So I don't know how they're being necessarily recorded. Now, this is already a deflationary token. There is no inflation mechanism within it. It was originally set at 10 billion, but we've already started to burn. So yes, in theory, by the time we get to July 2024, we'll have all 10 billion out in the circulating supply, but we know we are burning some. We've already burnt nearly $1 billion to date of it. So I don't know what it's going to be there, but this is a deflationary token and it will continue to be deflationary so long as they continue to do the burn mechanism. Now, one of the recent BIPs that they did, which I'm not going to bother going into, is just to show you, they're going to actually slightly change how the remainder of the Bybit fixed tokens are released. So it was like 187 million were going to be released, every month for 2 years. Well, now they just voted on this last month. They're going to change that. So they're going to do a new 48-month fixed schedule, so another 4 years. And it's going to start at 120 million tokens per month. And then after 12 months, that's going to halve down to 60. And then after 12 months, it's going to halve again to 30. And after 12 months, it's going to halve again to 15. And then it'll all be spent. So that's what the table is going to look like. So for those of you who are wondering where it's going to sit, that's what it's going to be for the next schedule. So that should take place. So as it says, the first contribution on the new schedule shall be April of 2023. So that's just happened, and we'll start to see that in the next one. So that's where we currently sit with that. In terms of, I'm just going to summarize it now because I feel this has been going on. Where am I sitting with this one? I was not shocked, but I'm surprised it wasn't an exchange token. Now I know that it's a DAO. I've got nothing actually against this token at all. It has got products that are launching on it. So it's got this new mantle, and then it's got other things that are going. You need to read into some of the little ecosystems that are under development, but you can clearly see that they are managing to do that. In terms of the treasury and the funds, as I said, it's got one of the biggest ones out there. It's very transparent in what they're doing with it. It's not just solely about bit tokens. It's USDC, there's Ethereum, there's loads of other ones in there. So I think, you know, as long as it sticks to its origins within the DAO, I think it's got a possibility there. The biggest thing that it needs, though, is it needs people to come to it to try and utilize its ecosystem or its treasury fund, which, given the amount of treasury funds it has, I don't think they're going to have necessarily a problem with that, but they are going to rely on external people actually coming towards them. The fact that it is partnered, sponsored, whatever you want to call it, by Bybit, I think it's great. I think Bybit is coming a long way as an exchange. It used to just be a derivatives platform, obviously with the introduction of Spot, and we go back to I've lost it now, the top trading accounts, doesn't matter, exchanges, here we go. Bybit is, you know, Bybit's number 6 in terms of overall score. It's certainly picking up in terms of transactions and weekly visits. So you know, it is an up and coming, it's not, that's disrespectful to it, it is a very well established spot exchange. So I think that will certainly help. But for me, it's just not for me. It's not because I think it's a particularly bad project. I was originally considering going into it, but I don't see the need or why I would necessarily need to deviate funds from something else just to potentially go into this. I didn't bother going into it, but, you know, I did draw up, bring it over here, we're kind of running out of time. I kind of did, you know, what the price is at the moment, where the multiple is, where the market cap would need to be. And for this thing to 10x, you know, we're going to have a market cap of nearly 9 billion. If you want it to get to a 50x, you're going to have to get to 45 billion. That's just for this market cap. And that's based on the current circulating supply at the moment. You know, you fast forward to 2025 when it's going to be there, we're probably going to be closer to 3 billion, if not higher. And so actually, it's quite a bit of a challenge for it to potentially get there in terms from the token. Not saying it's not impossible, but yeah, I'm sort of just from I haven't had time to go into it. From a tokenomics point of view, is it worth the risk to reward of where I'm at? Not necessarily for what it's offering my potential portfolio. So I don't particularly have a bad word to say about it. I'm just not personally going to invest in it. Bijan, I hope that helps with your understanding, and for those of you that potentially have never heard of it but might be interested, I hope that helps with you guys as well. Sorry it dragged on a little with that. I will never do 2 again. I think it's too much for one evening, certainly for researching it is anyway. Right, let's just see if I missed any questions. Okay, space in the Seychelles. Okay, same as Qcoin, talking about tokenomics, I hope there. Could circulating supply be the same as total supply? I have 180 million locked up at the moment and only 60 million active. Maybe, maybe. So from what I just understood, and there was that article, I don't think I've left it open actually, but I've got it saved somewhere. There's an article and it's from CoinMarketCap, and they go through why they can't always trust people who provide their data and the steps that they go through, and it makes sense what they do, and you know, people may not agree with that. So CoinMarketCap, CoinGecko, and Masari, for whatever due diligence they do, they all recognize only 60 million of those tokens. And yeah, the fact that some are just in dormant addresses might be the key reason as to why they're there. A lot of people from Chinese ancestry who live in Canada, US, and the West may look for OKX, exactly, especially with the bans in the US and Canada, I understand, with derivatives trading and everything else. And you know, if you move to one platform to do one thing, stands to reason you might end up just starting to use it for another. CoinMarketCap and CoinGecko's ranking on Casper is vastly different. I think that's probably down to the market cap and just what they recognize, and it means we're getting dumped. Don't know what that means, but okay. Right, it's 10 to 10 already. Sorry it's dragged on again, people. Thank you for all of you that are still watching. Let's quickly go through some price actions. So I think Ethereum's an interesting one to have a look at in terms of, we know we're going to have a look at Bitcoin dominance. We know where Bitcoin dominance is. The biggest thing that's going to shape Bitcoin dominance at the moment, if we were to look at individual altcoins, it's obviously going to be Ethereum because it's the second biggest cryptocurrency out there and the biggest altcoin there is. So in terms of sort of just where it's at, it's, again, like Bitcoin, we've had that great momentum up. This was the Shanghai Shapella upgrade. We saw that momentum and unlocking. I'm not saying the dump's causing that, but we've seen price come back down to a level about 1850, reset there. We've seen some interest in buying it back up, but a significant rejection and a failure at that level before it's fallen back down. And it's resting on that level. And we lose that level, and we're going to have to try and identify some other levels that it might get to. I don't know what I'm doing with this fib. I don't know where to start it from. Let's start from the start of the year, see what happens. So, I mean, that's not a bad one. I'm going to zoom in so we can see the candles a bit better. But, it's kind of resting on that 786 level that we've talked about. And we know the 618 is, if it loses this, that is a key level there. That, we can't deny that would definitely be, it's yellow. Need to change that. Sorry. It's a bit of an aggressive there, wasn't it? Let's try light blue. Shall we see? I'm just fiddling around with the colors. That's still pretty poor. But that's a key level. That 1700 level is definitely a level of interest. And in terms of, percentage fall from where we currently sit, it's 10%, just under 10% from where we go. So, a 10% day is a pretty red day. And then these other ones, I mean, certainly the 382, nicely tying in with these candles in and around here. And God forbid we get down to the 236, but that's taken in the high of just around about December and the price action prior to the run up before the FTX crash. So these fib levels from there generally seem to be working relatively well. I'm just going to delete that one for a second. Let's have a look at it if we ran it from the top down to where we are here. Probably going to be this one. Nah. I mean, what I would say, I've just said nah, but that extension, 618, you know how much I love the 618 level because I've changed the color of it. That's how important it is to me. Is smack bang in the middle of that zone we just marked there. So when we talk about confluence, maybe that is a level to certainly be looking at if we lose this one. So for those of you potentially looking at trading, maybe use some of these fib levels to try and identify some targets where you can put stop losses and entry positions in as well. But that's sort of what I would be looking at with Ethereum. I mean, if it does bounce from there, if it does bounce from where we are at the moment, I'm going to have to put the original one back on, I think. Let's just, oops. No, there's nothing really to see on that. I was going to say, look at the original, but there's no gap there. I mean, obviously we'd be looking to retest 2100, but for me, it's actually that 2000 level. That's what I'll be looking at. If we climb from here, everything's about this here. If we take out that high there, I'll be looking at where I can go. I never really check high block for Ethereum, but it is on there. So come on, let's run it. $2,800. There's a 1700 level down there. I mean, 2800. Sorry, 1800. It's not that far away. 1805. It's not. I mean, that's pretty tasty target, really. It's only $50 away, which is, I can't even work out the maths in my head. What's that? About a 3% move from where we currently are. What is that? 1800 at the moment. 1800 as well would be there. That's 1800. I mean, that. Not far away from where we currently are. It is a proper test of those bottoms and the previous tops, the previous resistance back in March. So I went down to there. Actually, I think I might need to go just a little bit lower. 1804. It's close enough. Close enough for my. There we go. So that'd be certainly somewhere we'd be looking at. In terms of DOT, I mean, DOT's at a bit of a make or break level. I'll be honest, I bought some more DOT today. I'm that person that bought some more. You know, it's a bag for me. There's still room for me to go. We're filling it, and it's in the low $5. I'm happy to buy and start staking that. So I have bought some. I'm quite happy with buying that. I mean, I wasn't so long ago I bought some at $6.70. So, you know, the fact that I can now get, you know, a few $100s worth more at $5.30, then I'm going to take it. So, but in terms of where we are, we're at, you know, pretty important level now. I mean, again, fairly clear double top. There, we're sat on the neckline, which kind of ties into this support. And this is, you know, this is FTX kind of level, and then fell away in December. I don't know why that fell away there, but, you know, we can see where the bottoms are. And if we lose this level here, then I'm going to be looking to buy from, I'll hold, if we lose this, I will hold off buying more until we get down to $4.40. That's where I see, you know, a retest of that. And again, you know, this is all the chop from back here. So $4.40. Quite line it up. I need to zoom back in. But yeah, and then I mean, a rough estimate of the neckline, if it were to break, would probably take us down to this $4 level. And you know, the problem is there could still be further falling. You know, that's the reality of the alts. The alts have been punished recently, and they continue to get punished. And you know, that's just unfortunately where it's going to go. Further down that they fall, you know, that's why you keep a little bit of money in reserve to try and buy some back. In terms of my portfolio at the moment, DOT's the only, BTC and DOT are the only two that are in the green for me. Matic, I'm pretty badly in the red. Near, I'm in the red. Link, I'm pretty much green. Oh no, OKB, I'm up. Quantum down. Rose, I'm down, but only just Glimmer, I'm down. No, Multiverse, it's called now. Multiverse X, I'm probably about break even. I got in at 38. So, you know, but that's fine. I'm all right with that. Luckily, I filled my bag with Bitcoin, and that's a much lower level. So I'm just happy to sit on it. And the rest of the alts, I'm just position buying with those. Do I see further falling with them? If Bitcoin goes down, then yes, I see alts falling much further than that, and I'll just continue to pick it up. Luckily, that meme coin season I did has given me a little bit of extra money to be able to put in. And I'll continue to do that. But, you know, that's just part and parcel of it. To think, you know, where we are with some of these, I'm going to take that and I'll just ride it through, keep on position building. I'll hold off buying DOT now until we get down to this level. Similarly with Glimmer. Glimmer's at all-time lows. It's got more unlocks every month until November. I'm kind of just not going to bother buying anymore until November now. Just taking that into account. If we have a look at some of the charts, what's interesting about Matic is it was so stubbornly held its ground for ages. I just thought, right, well, I'll buy it at $1. And then it's fallen these last 4 days much harder than most of the other alts. So maybe it's starting to get, you know, that reconnect with some of the other alts there, which, you know, that's just how it is, unfortunately. Can't win them all, as someone put in the chat earlier. I've not filled my bag full of Matic. So again, I bought some more Matic today. Bought some more Near today, bought some more Link today, bought some more Rose today, bought some more DOT today. So I bought a little bit of everything there because, you know, I've talked about it enough times. I'm never going to be able to catch the falling knife. And I don't think I'm like buying massive percentage amounts each time. I'm not. I'm just, you know, buying a little bit more, just taking advantage of those prices. And most of them I've just immediately staked. So I don't really have any intention of trying to sell it, to be honest. What percentage of DOT is your portfolio now? It's a good question. I don't know the answer to that. I think previously it was around about 16%. When it gets full, it'll be, I think it's somewhere between 25 and 30. Bitcoin's around about 20%. And then altcoins generally make up the rest. I'll keep 10% dry for something else I can go into later on. Can I have a look at GMX? Yes, I can. I thought you said have I had a look at GMX. I will have a look at GMX for you. So I've never used GMX, not used the platform or anything. So it's not something that I use. I can understand why people are sort of interested in it. I mean, you know, let's have a look. We'll try and do all sorts of TA with it. Let me just zoom out a little bit. Definitely some form of topping pattern. Oops, that's not what I wanted. Some sort of topping pattern here. It's just really struggled to get through that level. However neatly or unneatly you want to draw it. And I think probably what's happened today, I know he's dropped out of it. He probably had some sort of line in there. I would have had it. I'd tidy it up, but somewhere like there, you know, 'cause it seems to have bounced it and it lost it yesterday. Probably confirmed it today and just thought, right, well, where's the next level? I mean, although I do use those, I always look left in terms of where my levels are. So for me, actually, this one's I would say that one's kind of sitting on this at the moment. That's what I'd be interested in, is if it broke 58, because then we're kind of talking about where's the chop. So we can have a look at runs up. So let's see what happens if we did that. So that, you know, again, the 5 Fibonacci is right in that level that I just marked up, kind of matching with these touch points down here. You know, that's where I'd be looking. And again, 382, that's its next line of defense. You take this one out, kind of takes up that noise there, but you know, otherwise we can see a pretty decent correction maybe on the cards here. And you know, down to $40. Sorry, $40. I was going to say $39.80, but $40. I don't think that's out of the realms of possibility. Now it's a 30% drop in price. But you know, we just don't know where the rest of the markets are going, and also how long it's going to take. But in terms of where it is, I'd be looking at $60 for me. It breaks and closes below 60. If you're not already out, that's what I'd be wanting to have a look at. And I think this, you know, if it does decide to bounce, this one, no, I think 6 months is a bit too close. I'd be looking at $75 and what it did in and around there, and maybe looking at, if it gets rejected at that level, trying to take a bit of profit. And you know, it's a 20% move. It's not a bad return on however long that one takes. But yeah, I hope that one helps. In terms of some of the others, I mean, Kaz, I kind of just drew. I don't own any, as I said. If it gets down to a cent, I probably will. You saw what I posted for those of you that are interested in Discord. And this level's still applicable, you know, breaking this sort of 22, I call it 22 cents. It's 2 cents and 2, isn't it? Then, you know, the fibs don't really lie. But it is kind of in this downward momentum at the moment. And yeah, some people might say this could be bullish if it gets to the apex, but that's all down to Bitcoin. If Bitcoin decides it's going to dump, I mean, we have seen Casper disconnect once, but I just don't see it. I see everything going down with it, unless maybe some brand new meme coin that's come out. And again, these would be the levels that I would be eyeing up for me. You know, if I just that level there, that one there. Oops. I think these are probably very similar to the ones that I put in Discord. And then, you know, if it gets all the way down to the 382, then suddenly an area that I'd be happy to get in. I'd only have a small bag. I don't necessarily hate the project. I just struggle to see what it does different. It uses a different technology, but it, you know, in terms of transactions per second, it's, you know, it's not that fast. You look at Solana when it's working, 50,000 transactions per second. I mean, everyone takes the standard of Visa at 27,000 transactions per second, but you know, Avalanche and Polygon and all these other ones certainly do more transactions per second than currently Casper are looking at. And I don't know too much about them, but I've heard a lot of people talk. Casper and Cadena are very similar. I'd like to have a look into that and just see where those two necessarily sit. But you know, I want to make money, so if it gets as low as 1 cent, then I think there's an opportunity there for that to climb. But you know, someone once said to me, making money is not necessarily about where you sell it; it's actually where you get in on something. And at the moment, you know, we've not even thrown a moving average on here, but if we were to, it just feels like this one's had such a good run. It needed its pullback. Let's do an EMA, shall we? Throw on a 50. actually the 50 EMA. Well, it's lost the 50 EMA here. It's going back down. You know what? Probably because I'm not on the weekly. I won't have a weekly. You don't have enough candles on this chart. Okay, we'll just have to leave it there. That's why I didn't bother with an EMA. But it has lost it on the daily and closed below it. So, yeah, an interesting time for it to be around here. But again, if you're in it, if you believe in it, you know, there is opportunities to utilize these levels to just dollar cost average in. If the liquidity is that bad that you can't sell a large position without major slippage, then maybe it is a look to do that. And hopefully with the listings of, what did it have? Uphold, and I know it had KuCoin, but another one was announced today. Can't think what. But the fact that it's getting more of these listings, hopefully the liquidity will present itself. Pepe, yeah, so I did take a little bit of profit when it wasn't quite as high as up there. I wish it was. So I still have my 500 million tokens of Pepe. They're now sat on OKX because you can trade it on there. So I don't have to pay the ridiculous Ethereum fees that you were getting charged. Like I tried to buy some Ribbit, and I was wanting to buy $250 worth of Ribbit, and it was $110 in Ethereum fees on top of it. I don't know if many of you remember back in the bull run, but I actually stayed up till 1:30 in the morning so I could buy it because I remembered that's the time when it's actually the fees dropped, and it did drop down to $25, but still $25, 10% of what I was willing to buy. So I sold my plebs, I sold my Peepo, I sold my P Pizza, still got my Pepe, and then I got my Ribbit, and the Ribbit has been a bit of a disaster for me, I'm afraid. I think I got in about here 28 and it's now at 15, so it's 50% down. But you can't win them all, unfortunately. I'm conscious of the time, so has anyone got any other questions or things they'd like for me to have a look at? This one's run on far longer than I expected. Tell you what, we'll go to full face screen until we get an understanding. Oh yeah, it's late. Okay, potentially not then. Look, again, thanks for the 2 hours and 6 minutes you've given me on your Tuesday evening. One day I will get these into a regime where they are under an hour and a half. Not quite there yet. But hopefully you learned a lot, or at least garnered some information. There's plenty that you can just jettison, like Schrodinger's cat. Don't need to worry about that anymore. But yeah, I did enjoy researching both of those. I'm only going to do one per week from now on though. So I think I've got one more left on the list. Just to let you know, next week will be my last one until June. I go to Disney World with my daughter, or with my family. 19th of May, and I won't be back till the beginning of June. So next week will be the last one for a while. So if you've got any questions or anything like that, please just populate the question sheet beforehand, and I will do my best to answer them. All that's left to say is thank you very much. Thanks for your time, and enjoy the rest of your evening. Have a good one, everyone. Cheers now.